Hey everybody, today is May 3rd. It's a new month and we're going to talk about the stock market and we're going to talk about why the stock market keeps going up and whether we could experience a short correction in the near future. Now before we begin this discussion, please read the disclaimer and you can pause this video as you read it. Okay, so in our last video, we talked about why the stock market was having this epic rally over the last couple of weeks. And we talked about how ever since the pandemic crashed the market, we've had this really nice V recovery, right? The fastest crash and the fastest recovery in history. And ever since then, it's been pretty much smooth sailing. So why is it? Why is it the market keeps going up, right? And the most obvious reason is that we're seeing a recovery around the world. After the pandemic, people are getting vaccinated. Things are getting slowly back to normal, right? The more people getting vaccinated, the less likely the disease is going to spread quickly and kill people again. So businesses are starting to open back up again, and people are starting to go out and spend money again, right? When we saw the market crash, a lot of demand for products like oil and really consumer products went down because people were staying at home. So the velocity money went down. Now the velocity money is picking back up again, and also because the Federal Reserve and the Treasury printed a lot of money basically to help create stimulus, giving out checks to citizens, and basically to save the market and the economy from crashing into like the second Great Depression, right? And so easy money coming in, the velocity of money picking up, that creates inflation, right? And so you're starting to see that the value of the dollar come down, and that's another reason why they want assets that are pegged to dollar, right? They don't want to hold dollar because it's going down more, right? And so anything that is tied to dollar, like stocks, real estate, cryptocurrencies, are going up. So obviously you've probably been hearing a lot about real estate going up, right? Lumber prices going up. There's a seller's market in the real estate market, right? We're in this, people are talking about how this is like a bubble comparable to like the mid 2000s, right? And yeah, cryptocurrency is also going up. So a lot of assets tied to the dollar are going up as the dollar continues to go down, right? Because they're printing more money, devaluing the dollar. So that's another reason. So recovery from the pandemic, the dollar going down, and really just also the third reason is that we're in the middle of earnings season. And in our last couple videos, I basically covered the earnings season, and I talked about how I expected earnings seasons to be good, and that's exactly what happened. So we've been seeing a lot of strength in the markets because earnings seasons have been doing good. And this is, by the way, this is the S&P 500 SPY, which is the ETF that tracks the S&P 500. So yeah, so all those three reasons are the main like fundamental reasons. So let's look at the technicals now, right? Technicals, we've been seeing a really strong break above. We saw a gap up, and I talked about how this Fibonacci levels tend to act as resistance or support. So when we hit this Fibonacci resistance level, as we try to break up to new all-time highs, we did find some resistance here. So we had a couple of sessions where we went sideways, but it looks like we're holding it fairly strong right now. So of course, the market is looking pretty strong overall as earnings seasons continues to move on and come to a close eventually. I do expect the market to hold this level, and because we came down here. So usually when we flip this and turn into the resistance into support, this acts as a strong floor, and we should be able to see the market come up higher. However, I just want to caution that like even in a strong bull market, it's very healthy for the market to have corrections once in a while, right? So we had these dips that, and this is where our moving averages come in handy, right? Moving averages generally will tell you the direction of the trend, such that like when these lines are postulated in a bullish manner, right? Like silver above the gold line and the gold line above the blue line. So what are these lines? The silver line is the 50-day simple moving average. The gold line is the 100-day simple moving average, and the blue line is the 200-day simple moving average. And these are all on daily chart. The 50-day is our short-term moving average. The 100-day is our mid-term moving average, and the blue line is our long-term moving average, right? So when these price comes down, we want to see the price find support on these moving averages, right? If the direction of the trend starts to change, like when we start to come down hard, these lines will start to cross, and they'll tell us that the direction is starting to look more bearish, right? But right now, these moving averages are postulated in a bullish manner, which suggests that the trend will continue to go higher. But if we look at the price action, the history of the price action, we do come down once in a while, right? There is profit taking, and that's totally healthy in a bull market. Now, we haven't had profit taking in a while, right? In at least a month. So, and we do have a gap here. And this is something I talked about in our last video, how these gaps can usually take a lot longer than people expect to fill, right? Like most gaps tend to fill pretty quickly, like over here, but these gaps can take a month or two to fill, right? Over here, this gap we talked about, that take a month or two to fill. So we do have a gap over here. Now, of course, this level, Fibonacci level, has held over here, try to break below, but we didn't. So we found support. If we do hold the Fibonacci level, I expect the stock market to continue higher. If not, we'll probably come down and fill this gap. So those are some possible scenarios that may play out in the near future. Either way, like, I do want to see the price come down once in a while and touch this short-term moving average, right? I mean, this is a moving average that we touched 3 times this year. And so it's not out of the ordinary for us to have a bit of a pullback in the near future, since we've been in this strong uptrend for over a month now. So if this thing moves up and touches this line, it'll be nice for us to come back, even if we do come up a lot higher, to come back and touch. And I think that could be a great buy the dip opportunity, right? Because it might seem like this thing will come up, go up, but it's possible it could stall like over here, right? And it can roll over. But let's just look at really quickly the history of the stock market, right, over the last couple of years. So you can see, like, even in a great year like 2017, we did come down and touch our short-term moving average like several times, right? And these were all great buy the dip opportunities. So, you know, just going back a little bit more, 2013, 14, you know, so totally healthy in an uptrend for the price to come back, the stock market to come down and touch these moving averages once in a while, right? And that's just healthy profit taking, shaking out some of the weak hands. So overall, like, with the pandemic, with rising inflation in the near future, the devaluation of the dollar, see the dollar coming down, and yeah, the earnings season looking very strong. I do expect the stock market to continue up higher, right? Talked about in previous video how we're in a long-term secular bull market since 2009, even though we had this huge epic crash. But yeah, the fastest recovery in history, right? So that just shows that there's a lot of conviction from institutions and retail that they expect the companies to recover strong and to continue up higher and performing strong in the near future, right? So yeah, so to end this video, even though I am very bullish, of course, we do have multiple monthly green candles in a row, and we have 3. And right now, the month we just had a new month, which is May, of course. So usually when we have this many, it's not out of the norm to have, you know, a red candle once in a while, right? A corrective month. So and also the weekly is looking very strong, and so we had 4 consecutive green weekly weeks in a row, and then now these candles are starting to look pretty thin, right? So these tend to be indecision candles. When you have like these sort of like thin candles, this is not a perfect doji candle, but it is very thin. That means that there's a lot of indecision between buyers and sellers. They're trying to figure out where the direction might, and this could end up being like a pattern that stalls and rolls over before continuing higher. So just keep that in mind, that even though I am bullish on the overall longer term trend, in a short term trend you want to keep your eyes open for any possible pullbacks. And like I said, on the daily chart, I like to see the price come down and touch these short term moving averages once in a while, right? So yeah, so just to summarize, I am optimistic on the stock market. If we hold the Fibonacci level, support level here, we should continue to go higher. If we don't hold this level, Fibonacci support level, probably roll over, fill this gap, and touch the short-term moving average, right? And that could possibly be a good buying opportunity. Of course, this is not financial advice, this is just entertainment. So do your own research, do your own due diligence, and make your own decisions. But yes, overall, looking very optimistic on the stock market, and I'll definitely continue to update you guys in the near future as we see if there's any more interesting price action that develops. Okay, thank you for watching this video. If you found it useful, informative, helpful, please like this video, leave a comment below, and subscribe for updates. Thanks again. I appreciate your support, and have a great day.